Consumer sentiment crashes? What the heck is going on, Michael?
Not only did it crash, but it set a record low. And this is frankly what I warned about earlier in the week. I think it was on Sunday. I talked about two important numbers that would give us an opinion of the war, right? A lot of the macro data we've been getting to date has been for, February, January, right? Kind of preceding what happened on February 27th or 28th. And we got both this week. We got CPI and consumer sentiment this morning, and they're both ugly. They're just freaking ugly. Consumer sentiment crashed to 47.6, record low. Last was 53.3. They thought it would fall to 51. So all kinds of bad. And you got to remember, we are a consumer-based economy. And, I've been doing this for 30 plus years. And to realize that consumer sentiment is worse than 9/11, worse than the pandemic, worse than the GFC, worse. I mean, you just got to realize what's going on. This is not good.
Interesting times. A lot to think about, a lot going on. This is for April the 10th, 2026. Let's get into it. So let's talk about, obviously, I'm going to come back to the consumer, talk about recession. I'll come back to that. I'm going to loop back. But let's talk about the big thing, the biggest story for the last 5-6 weeks.
Yeah.
The ceasefire, fragile. Is it real? Is it going to stick? What the heck is going on with the war in the Middle East?
Well, near as I can tell, again, I don't claim to be a war expert or have any knowledge of the Middle East, but near as I can tell, I think calling it a fragile ceasefire is accurate. I would argue that the most important thing, at least from a worldwide perspective, is the Strait of Hormuz. Near as I can tell, it is still shut down. And, I've read reports that a couple of ships have been trickling through. I've also read reports that they're trying to collect a toll and things of that nature. If any of that is true, and again, I don't know if it is, but if it is true, the Strait of Hormuz is in a worse position today than it was 6 weeks ago. And I frankly don't know how you can look at that and claim victory. I don't know how you could take an artery of worldwide commerce and dramatically make it significantly worse and more expensive and claim that's a victory. I just don't know how you can do that.
Okay.
So, so to that end, I think we need to watch the traffic in the cost of doing said thing, because if it continues as it appears, we ain't seen the worst of this yet.
Okay.
There's more to come. And the last thing I'll say about this, I think this is important. If you remember anything about the last 6 weeks, it seems like a standard process now to wait until the stock market closes. And then they get like 2.5 days to do batshit crazy things. Right. And then they hope to save the market Sunday night or Monday morning. So again, the market closes in, I don't know what that is, 8 hours or so.
Yep.
So buckle up for this evening. I mean, if history is any kind of sign of what's to come, buckle up. This weekend could get interesting.
Buckle up. Interesting to say the least. I'm going to come back and ask you questions about the Middle East, the war, China, Taiwan, if we have time toward the end of the show based on our time. Is there anything else? I'm going to come back to the Strait as well, but is there anything else that's just keynotes from the show notes that you want to talk about the Strait?
No, just again, I think we need to realize that the last 6 weeks, there's been significant activity Friday afternoon after the market closes. So it's Friday. Let's see what happens this evening.
Let's see. Okay. So in the show notes, we have after the market closes. What did the stock market? It felt like everybody was back, and I saw lots of green tickers, and everything seemed to be good. And then the CPI number came out, which we'll talk about. But just what's your thought about after the market closes?
Again, I think we need to be, so specifically about today when the market closes, is we need to be paying attention because something bad could happen.
Okay.
I mean, that's just the fact. Again, if you look at the last 6 Fridays, there's been significant activity after the New York Stock Exchange closed, and then they have 2.5 days until the market opens, where they can try to calm the market down. So it's just a pattern. I mean, patterns break all the time. So maybe let's be clear. I hope nothing happens. I just want you to realize that the last 6 weeks hopefully taught us something. And then let's talk about the day the ceasefire, right? I think the Dow was up like 1,200 points, and oil crashed 20 or whatever it was. I talked to a couple of guys I know on Wall Street that run big money, and what they basically said, given their screens, is Wall Street was offsides. Most of that run up was just short covering. They were positioned wrong. So, the mom and pop investors probably did quite well because they've been buying the dip for years. But the reason that was so violent is Wall Street was offsides. They had positioned for more pain, and they got caught. That's what the guys on Wall Street said. I talked to 2 or 3 of them that run, 8 and 9 figure funds. So that's what they were telling me.
Smart money staying in dry powder, being patient, and basically, how are things going to play out, and kind of setting back. Is that feel right?
Yeah, I would tell you that a lot of people are going to be what's called flat at the close, which means they're not going to be short or long. Because I think everybody, the smart money who trades momentum and swings and all of that, they just don't want the weekend risk. There's more weekend risk. Like if you go back to January and February, Wall Street was comfortable carrying stuff for the weekend, right? It wasn't high volatility. That ain't the case anymore, right? You'd have to have stones to hold over the weekend while this craziness is going on. And it's just not worth the risk.
Interesting. Okay. Let's talk about the CPI number. That was a big headline this morning when I turned on the TV, CNBC talking a lot about it. What is your take on the CPI number? What was it? And talk about it.
Yeah. So we got another thing right. I mean, this is something I called a month ago. I actually nailed the monthly number of 0.9, right? I called it. You can go back and watch the receipts. And that meant it came in above 3, like I said, even though a lot of people told me it would never go above 3. It certainly did.
Yep.
And again, you remember the base effect was 0. So all you had to do was take 2.4 plus 0.9 and you got 3.3 headline. And I got to tell you, next month will be worse, right?
Yeah.
The headline number will be worse. That said, there's a kernel of good news. The core number, again, ex oil, ex food, came in at 2.6, slightly better than expected. Okay. It was a 0.2. It was expected to be 2.7, so a little better than expected. I expect core to be much worse next month. Now, why is that? First off, core doesn't take into account gasoline, diesel, all of that. That's in the headline. However, when you look at the trickle down effect of $5 diesel and $4 gas, that's going to start showing up in other variables next
big
month,
time.
Right? There's a lag. So inflation is not done. Also buried inside CPI was a little bit of a surprise to me. Shelter, right? Shelter inflation had been trending down for 13 months, I think, 14 months, a big number. And that reversed. Not a lot, but it did reverse, right? And you always got to watch when trends reverse. And shelter was up 0.4 month on month, now 3.02 year on year, again, higher than last month. So again, we're not getting the tailwind of shelter collapsing. It actually went up last month. So again, inflation is sticky. The longer this goes, the longer we have 2 or 3 ships going through the strait, this is going to be a worldwide problem.
Yeah.
That's what's going on.
I've got so many questions. We're going to blow through these show notes, and then you and I are just going to riff for as much as we can to the end. So let's talk about KB Homes, new home builds. What was the headline today this week with KB Homes?
I just love kicking Gavin Newsom in the shin. So KB Homes has decided to move their headquarters from Southern California to Arizona. Yep. So congratulations, Gavin Newsom. Another Fortune 500 company is leaving California for better pastures. And it's just another way I can kick Gavin Newsom in the shin. So that's what that note's about.
Interesting. So what do you see with home builders, just because we're talking about KB Homes, and how do you think home builders play out over the next 30, 60, 90 days?
Well, I think home builders have realized, I mean, if you look at their margins, they're giving away healthy bits to sell inventory. So you're going to see more and more builders, once they blow through the inventory they have, they're only going to build once a contract is signed. So, right now you can get a new home for less than an existing home, and you can get better interest rates. And, that's probably been going on for 6 months. It probably goes on for another 6 to 12 months. I don't think it's that way in a year, right? I think builders are a lot better at running their balance sheets and income statements. And right now they're in get smaller mode, right? Have less inventory. So again, I would expect margins to be hit for another quarter or two. But after that, they're only going to be building what they have a contract for is what I suspect.
Interesting. Okay. Sounds about right. Lots of opportunity. The builders have their banks. They can buy down rate, and then they can give away, again, slice their margins. So talk about the weekly unemployment.
Yeah, weekly unemployment, again, we don't have to get too up in arms, but this is the first time weekly unemployment took a jump. And maybe we're just hypersensitive to it. Again, I think it's been below 210 for quite a while. This week jumped to like 216. In the grand scheme of things, 216 is not a problem, but we got to be hypersensitive, right? Is this, we're going to pay attention next week, right? Next Thursday will be important. Does that 216 become 226? And then does it become 246? Or does it just go right back to 210 and then it's a nothing burger? But yeah, I think at least I am. I'm expecting the job market to eventually break. Certainly the longer that this war goes on. So again, I'm hypersensitive, and this week, the weekly unemployment number was certainly worse than expected.
Interesting. Okay. So obviously for a while there, it felt like in the beginning of the year, our big talk track was our big headline for this show was jobs, jobs, jobs. And now still very, very important, although it feels like based on a war, based on oil, based on inflation, jobs are still very important. It's just it's number 4 or 5 on the headline list now. Is that?
Yeah, I think that's right. Certainly probably number 3, war, inflation, jobs. There may be something else in between there, but yeah, I mean, it's all bad, right? I still can't believe that consumer sentiment number. I mean, I just want you to think, right? If you're over 40, I want you to think back to 9/11. I want you to think about the .com crash.
Yeah.
I want you to think about the GFC. I want you to think about the craziness of shutting down the country in the pandemic. And the consumer sentiment number this morning is worse than all of those. I mean, that should wake you up. That's not good. That just means consumers will shut their wallets. They will pull back. And again, the longer this continues, you're going to see stocks take big hits because they're going to have to reset earnings. I mean, that's how this game is played, right? If the consumer, and we're 63% consumer-based economy, if consumers are shutting their wallets, that's not good.
Very interesting. And I know, like, again, watching a little bit of CNBC, I know banks, are going to have earnings next week for banks.
Sure.
And then they talked about this was supposed to be, key phrase, supposed to be a big year for mergers, acquisitions. It feels like all of that's probably on hold in spite of this, and feels like maybe the banks are going to also underperform.
I hadn't thought about that. So what I've been reading a lot about is private credit. And I think one of the things that a lot of people don't appreciate is some of the biggest banks have a lot of exposure, right? Wells Fargo being one. Bank
Forgot about private credit.
Yeah,
like
private
the whole
credit.
thing. Like there's so much going on. We didn't even right. I'm like, oh shit, private credit. Go on, continue, please.
Yeah. So again, I think there's a lot of exposure there. I do think private credit is a little more controlled, certainly more controlled than the GFC, right? Because again, those synthetic CDOs went up to like 70 trillion or 68 trillion or whatever, and they didn't have gates. Private credit has gates, which again is a feature, not a bug. So you don't get a lot of that circular forced selling. But again, I expect banks to pull back. And again, banks make money lending. So if banks are pulling back on lending, that's kind of like a hit to the future. So yeah, I would expect banks to be, they report next week, man. I expect the big banks to give a cautious tone. I don't know how they couldn't be cautious.
Right. Makes perfect sense. So let's go back. I want to just a little bit on the war, the ceasefire, and even something wasn't in the show notes and nobody's really talking about. So like China and Taiwan, I have no idea what even that means, but I know like I've seen that bubble up in some headlines. Explain just a little bit about China, Taiwan, and then is that maybe even compounding into a black swan or where we're at today, or just any thoughts there?
Well, wow, that's a hairy ball of yarn, right? I
Yeah.
don't mind it. I like it. Obviously, Olivia's from Taiwan, so I have a lot of family there. We talk to them all the time. And it's funny again, my opinion, my experience, even the folks in Taiwan are kind of divided on what they want, right? Some of the older folks kind of see Taiwan as China. They're like, hey, let's get back under the umbrella. A lot of the younger folks, and I'll put younger below 40, they're like, no chance. We're our own country, right? So there's even inside Taiwan, if you talk to them and you have family there and they're free to talk, it's kind of divided on who's like what they think, what they even think. So I think if you look at the chessboard, I think it's very clear and not a surprise that China sees Taiwan as theirs, right? Now you can argue, what does that mean? But I think that would be fair to say. Also, I think it's fair to say that Taiwan leadership and probably most of the country see themselves as a standalone country. And, someday that might come to head. Now let's circle back to what I think is going on, especially with Venezuela and then Iran. I think this is just frankly a proxy war. I really do. If you look at the chessboard, you can see President Trump trying to create leverage on China.
Yep.
Right. I think Trump's master plan, if you want to call it whatever you want to call it, is to get leverage on China to get a better deal, sometimes called the grand bargain. Because if you step back a year, China had us by the balls, right? The rare earths, pharmaceuticals, we had no leverage. We had zero leverage, right? Other than we are the biggest consumers of crap, we had no leverage with China.
Yep.
And I think President Trump or someone in his administration said, that's a shitty negotiation standing. Let's go create some leverage. So you take out Venezuela in an amazing 4-hour operation.
A lot of oil.
That's a lot of oil. Then you go to Iran and you try to take that away from them. And suddenly you walk into a negotiation with China with some chips, right? If you didn't have that, you were walking into that with a 2-7 offsuit, right? If you know poker, that's like the worst hand you can have, right? And China's holding, 2 aces.
Right.
Right. I'm not going to the flop with a 2-7 offsuit up against aces. Your chances of winning are not great.
They were aces. Now what does China have now? King, queen offsuit? King.
Yeah, probably. I mean, I think we probably have, a pair of 8s, pair of 9s, something like that. And,
okay.
And they probably do have connected face cards.
Okay.
Probably.
Okay.
Again, that's a hand that's far more winnable for both sides.
Okay.
But again, I think what's going to happen, again, this is, I mean, if I'm right, this is completely a proxy war. This is not about Iran. This is about China. So again, we got to get this behind us. This is not good for anybody.
Okay.
It's not good for China. It's not good for us. It's not good for Europe, Asia. It's just not good.
Last 2 minutes in this talk about what do you see in the bond market with the 10-year and specifically not even the bond market. What do you think is going to happen to 30-year mortgages over the next couple weeks? How do you see this playing out, bouncing around? That's what I texted you the other night.
Yeah.
How do you see this playing forward? And then what are the opportunities for our community?
So the first question's hard. The second one's easy. So we'll do the rates first. I think if you could tell me how many ships are going through the strait unencumbered, I could tell you what happens to mortgage rates. And the basic story there is, the more ships that go through unencumbered, the lower mortgage rates will be. So
oil free flowing means better rates, better stability.
Right. And that means we're starting to trust each other. Because right now there's no trust. Right. There's like one ship kind of like sneaking through probably at half speed, hoping to not hit a mine or get bombed. And then they make it through and they're like, woohoo, we made it. And then another one tries. We got to get that, clipping.
Got it.
And if it doesn't, we're in trouble. Now, for the opportunity for us, again, this feels horrible to say, but we're like the only community that wins in this environment. Us, bigger pockets, the people that are buy and hold, because I'm seeing it. There's more and more sellers that are crying uncle, right? There's even builders crying uncle. We can go get some amazing deals. I mean, if you look at just builders, their average margin hit is 20%. I mean, that's freaking nuts. So again, not everywhere, not every market, but when you take a time to read their financial statements, it's some big ass numbers. So again, our job hasn't changed. Get a buy box, get focused, learn average, do good or great deals, write disrespectful offers, learn seller financing, and just go ham. Go ham. Again, remember, you're going to have to write 10, 20, 50, 100 offers, but your job is to get one amazing deal. So, our opportunity hasn't changed. And it's, again, I don't know why people don't believe this, but 2026 is the best year to be a buy and hold investor in the last decade. I'll say that again. It's the best buyer's market in the last decade. Just know that. It takes work. It's never easy. But trust me, you want to have less competition, more options, and more motivated sellers. Congratulations. You're 3 for 3.
Mic drop. Michael Zuber, thank you for all the work you do. Thank you so much. Have a great weekend. Thank you, brother. Appreciate you always. Thank you.